Welcome back, guys. As we wrap up another week on the 7th of March, our major indexes have now declined for 3 consecutive weeks. While such pullbacks may seem concerning, they are actually a natural and necessary part of the market cycle. These corrections help cool off overheated stocks and bring valuations back to more sustainable levels. That said, even in this weak market environment, some stocks have managed to break out. But before we dive into them, let me remind you, this channel serves only as a screener for stocks at key levels, not as investment advice. The first company on the list today is Diagnostics Inc. with ticker symbol DGX. This stock has given us a horizontal breakout, and I have pulled the chart on a weekly time frame. Now let's take a closer look at its price action. As you can see, this stock made a high of approximately $174 back in December of 2021. Since then, it has remained below this price level for 3 years and 3 months, until last week when it finally broke out. One positive sign in this breakout is that the stock is trading above both its 50-day and 200-day exponential moving averages, indicating strength in price movement. However, on the volume front, there hasn't been any extraordinary surge. While the volume has been increasing over the past few weeks, if we compare it with the average volume of the last 2 to 3 years, the uptick isn't significant. It remains in line with historical volume levels for this stock. That said, the gradual increase in volume over recent weeks is still worth noting. If we analyze the historical dip that occurred after making the previous high, the stock declined by approximately 30%. If we apply the same percentage from the breakout level, it points to a potential level of around $225. Of course, this is not a price target, just an observation. So keep this stock on your radar and track its momentum over the next few weeks to see how it behaves. DGX operates in the healthcare sector, providing diagnostic testing and related services to patients, clinicians, hospitals, and health plans. Founded in 1967, it is headquartered in Secaucus, New Jersey. The company has a market cap of $19.48 billion, with revenue of $9.87 billion and net income of $866 million, reflecting a profit margin of 8.77%. It has a PE ratio of 22.81 and an EPS of $7.7. The stock offers a dividend yield of 1.71%. The second company on the list today is Weis Markets, with ticker symbol WMK. I have pulled up the chart on a daily time frame, and this stock has also given a horizontal breakout, similar to the first one. Now, I often see comments from people who are not very comfortable trading stocks that give multi-year breakouts. Some traders prefer setups on shorter time frames, where they can aim for smaller profits in a shorter period. Keeping that in mind, I have included this stock, which has given a breakout on a relatively shorter time frame. This stock made a high in August of 2024 at around $76. Since then, it has traded below this level until November 11th, when it attempted to break out but failed. However, after 2 unsuccessful attempts, the stock finally broke through last week. If we examine the volume, we can see a slight uptick in the past few trading sessions, which is a good sign. Also, the stock is trading above its 250-day exponential moving average, another positive indication. Now, if we measure the dip the stock took after making its previous high, it was approximately 18%. If we apply the same percentage on the upside from the breakout level, it points to around $91. Again, this is just an observation, not a target. The only concern with this setup is that after breaking out, the stock has already rallied by approximately 6%. If this aligns with your risk appetite, then it's up to you to decide. However, if this turns out to be a false breakout, there is a risk of at least a 6% downside. A more cautious approach would be to wait for a potential pullback. If the stock returns to the breakout level, consolidates for a few days, and then resumes its upward movement, that could provide a better entry point. But again, this is just my personal preference, and you should make your own decision based on your strategy. So that was the second company on the list for today. WMK operates in the consumer defensive sector, owning and managing retail food stores that sell groceries, pharmacy services, fresh produce, and general merchandise. Founded in 1912 by Harry and Sigmund Weis, it is headquartered in Sunbury, Pennsylvania. The company has a market cap of $2.19 billion, generating revenue of $4.79 billion and net income of $109.94 million, with a profit margin of 2.29%. It has a PE ratio of 19.9 and an EPS of $4.09. The stock offers a dividend yield of 1.67%. Speaking of pullbacks after a breakout, the third company on the list today is SS&C Technologies Holdings, with ticker symbol SSNC. We have covered this stock previously when it gave a breakout, and at that time, I had urged viewers to wait for a pullback before making an entry. Now, I just wanted to highlight that the stock has indeed pulled back in case you missed tracking it. So consider this as a quick reminder. Let's quickly go over a few key points. This stock made a high of approximately $84 back in January of 2022. After almost 3 years, it finally gave a horizontal breakout. However, after the breakout, the stock has now pulled back to retest the breakout level. Looking at last week's candlestick, the long wick suggests there is buying interest at this level, indicating that the previous resistance is now acting as support. This is a good sign for potential continuation of the uptrend. So keep this stock on your watch list as well, and let's see how it behaves in the coming sessions. So those were the 3 horizontal breakouts, and now let's move on to some downtrend breakouts. But before we continue, if you've been finding this video helpful so far, make sure to hit the like button and subscribe to the channel if you haven't already. Also, drop a comment below and let me know which of these stocks you're tracking. Now, moving on to the first downtrend breakout on our list, we have Leidos Holdings with the ticker symbol LDOS. I've pulled up the chart on a daily time frame, and you can clearly see that the stock has broken out of its downtrend. If we take a closer look, the downtrend actually began after the stock hit a high of approximately $202 in November of 2024. Since then, it has been steadily declining, but that trend finally came to an end in Friday's session when the stock jumped by around 4.5%. So, after almost 4 months of being in a downtrend, we now have a breakout in this stock. A few key things to consider here are the exponential moving averages. The stock is currently facing resistance from its 50-day EMA, which is represented by the white line, and the 200-day EMA shown in yellow. These moving averages have acted as strong resistance levels in the past, and the stock seems to be struggling to break through the 50-day EMA once again. This is something to keep in mind because if the stock fails to break these resistance levels, the breakout may not sustain. However, if it does manage to push through, the next major resistance level to watch is around $144, which has historically been a significant barrier for this stock. Now, one possible scenario to watch for is if the stock moves slightly higher, faces rejection either from the EMAs or from the price resistance, and then pulls back before showing another sign of bullishness. That could present a better entry opportunity, but let's wait and see how it plays out in the coming sessions. LDOS operates in the technology sector, providing services in defense, intelligence, civil, and health markets. It is headquartered in Reston, Virginia. The company has a market cap of $18.26 billion, with revenue of $16.66 billion, and net income of $1.25 billion, achieving a profit margin of 7.53%. It has a PE ratio of 15.07 and an EPS of $9.24. The stock offers a dividend yield of 1.11%. The next stock on our downtrend breakout list is Science Applications International Corporation with the ticker symbol SAIC. The chart pattern here is quite similar to what we just saw with LDOS, but there are a few notable differences. One thing to keep in mind is that in the pre-market, the stock is already showing signs that the breakout might not hold, as the price is currently around $108, which is below the trend line. However, this isn't entirely unexpected since the stock had already rallied nearly 9% in Friday's session, so a minor pullback was always a possibility. That said, if the stock closes below the trend line on a daily closing basis, then we could see confirmation that this was a false breakout. A few other points to consider. This stock had been in a downtrend for roughly 3.5 months before breaking out. Right now, it is trading above its 50-day EMA, but it still hasn't crossed its 200-day EMA. The good part here is that if the breakout does sustain, the next major resistance, the 200-day EMA, is about 8% above the current price. That's still a decent potential move, so it's worth keeping this one on your watch list as well. SAIC operates in the technology sector, providing engineering, systems integration, and IT services for government agencies, including the Department of Defense, NASA, and Homeland Security. Founded in 1969 by John Robert Baster, it is headquartered in Reston, Virginia. The company has a market cap of $5.44 billion, generating revenue of $7.38 billion and net income of $303 million, with a profit margin of 4.11%. It has a PE ratio of 18.77 and an EPS of $5.93. The stock offers a dividend yield of 1.33%. The next stock on our list is Restaurant Brands International, with the ticker symbol QSR. This one follows a very similar pattern to the previous stocks we discussed, so I'll keep the discussion concise. This is a downtrend breakout on a daily timeframe chart, with the downtrend starting all the way back in March of 2024 from a price of approximately $83. After almost a year of trading below this level, the stock has now broken out of its downtrend. The current market price stands at around $69, so this is another stock worth keeping an eye on. The last stock for today is Insperity Inc. with the ticker symbol NSP. Again, a very similar chart pattern, so I'll keep this short as well. The stock began its downtrend in January of 2024 from a high of approximately $119. It remained in this prolonged downtrend for nearly 14 months before finally giving us a breakout in Friday's trading session. The current market price is around $90, so this is another one to track in the coming weeks. So those were the 7 stocks on the list today: 3 horizontal breakouts and 4 downtrend breakouts. These are stocks that have shown some significant price action, and you can track them over the next 2 to 3 weeks to see how they perform. But as always, only consider an entry if it fits your trading style and risk appetite. That's all for today's video. If you found this helpful, make sure to like the video and subscribe to the channel if you haven't already. Also, drop a comment below with your thoughts. Your feedback really helps the channel grow. Wishing you all the best in your trading, and I'll see you in the next one.